Hey everybody, this is Jim at SP500chart.com. It is Sunday, right around noon, and I got a chance to do the video as opposed to later tonight, so we're going to take care of business right now. Just need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm still not a licensed financial professional, but I am a guy who draws lines on charts. So let's take a look. Starting out here with a daily chart, primarily to just kind of put this last leg up into some context. And that context is it's been going pretty strong since the middle of November. That is for the market's behavior as it has taken place in this bull run since early March 2009, this is a fairly extended rally. It's not as long as the one that we had off of the October bottom in 2011, but it's longer than the one we had after the spring swoon. I was going to say swing sproon, but the selling that took place in the spring of 2012 led to a rally that lasted about 4.5 months. We are now 1, 2, 3, 4, 5, 6 months into this rally. This rally back in 2011 that ran into 2012. 1, 2, 3, 4, 5, 6 months before it topped out. We have to go back actually to the rally that started this whole thing off back in March of 2009 to find a rally that is longer than what we are currently experiencing, for what that's worth. Now, I mentioned in a couple of other videos that there are signs that this is, even though we're setting new highs, there's signs that it could be starting to lose some steam. And primarily, the sign is the fact that this being the old resistance line that worked for almost 2.5 months, we're not there. We're really significantly underneath that resistance area right now by roughly 3%, 3 and a fraction percent of market gains. So that really strong initial burst off of the November lows has just been sort of, it's being attenuated somewhat, for what that's worth. But the good news is, even though this guy just keeps plowing on up, we still have what I believe should be some pretty reliable and helpful trend lines. We had been using this yellow trend line. That is going to be very important going forward. Make no mistake about it. But now we also have a renewed channel that's a little bit more aggressive that should also be very helpful. I mentioned that there was a blue resistance line that was defined by the last 1, 2, 3 highs, and we're making a 4th attempt for that line. Really pretty much made it on Thursday and then started to sell back, but we've seen these kinds of lines at times just kind of invite, not invite, but almost attract the levels like a magnet. So let's see if we get hard resistance here, if this market is going to back up starting the week of May 13th. And if that is the case, we got this line to watch. And then we've got a couple other areas to watch. If we go back out to a daily chart, I want to show you that we have a number of areas where we might expect horizontal support. This one I'm going to lose because it's pretty minor, but this one right here at about 1540 I think could be very important going forward. Additionally, this right here that is at about 1490 or so, maybe 1488, that could be important as well. So if we look at what took place over the week in the way of a weekly analysis, we had a rally on Friday, and the idea on the weekend review was, is this going to come down and test this gap, or are we just going to make a bull flag and keep going up? Because remember, we had this line right here, which by the way needs to be nudged ever so slightly, probably to about here. We had this line that really, once we got above and broke out over this truncated, I'm going to call this a truncated inverted head and shoulders. It's kind of a strange looking thing. It really doesn't have a right shoulder at all. We had a left shoulder, what looked like a head, and then just kind of sideways for a right shoulder. That jumped up, and immediately we knew to either look for some type of flag to form, but instead we got a little rising channel. So the entire week, with the exception of brief moments on Thursday and Friday, obeyed the trend line that was set up with the lows of Friday and the lows of Monday and Tuesday. So in that way, this line worked well all week long. Now, one thing I mentioned when we had this little dip below this line on Thursday, I just, that looked a little suspect to me, that it could be a sign of weakness. But the fact of the matter is, this kind of little dip here clearly is not of great technical significance. And I mentioned that if the S&P did not break any further than roughly about 1620, 1622, then I thought there was a chance that this could just recover and get back in this little rising, call it a typhoon flag if you want to. And that is what happened on Friday. We closed right at that line at the end of Thursday. We opened Friday above, came down below, never got down to that area where I would start to think this is really technically significant. So what I think we've got here is the a little pattern on the daily chart that, excuse me, not on the daily chart, on the 5-minute chart, where this kind of serves or served as a little flag. And you can see it's got a, if we go and we sort of ignore these dips right here, it's got a generally wedge-shaped pattern to it, with the bottom being ragged. So you know, this could just keep on going up until we run into this line square, maybe at about 1640. But I would again watch this blue line going into the week of the 13th, but ignore the little momentary dips underneath it. Instead, look for signs of significant breakdown. And again, that would probably have to take place around the low 1620s. But even once we get there, assuming we do, eventually we will. But whether it's this week or a month from now, I don't know. But I will say this. The rising green line, this has been a pretty well-defined line that has been marked by bottoms that both times were inverted head and shoulders patterns. So I think that line is really where the market has been telling us lately that once we hit this line, we make a bottom, and then we go back up. And we've had 1, 2, 3 tags on this top line, But as I mentioned, this little blue line right here, which is drawn over the previous three tops, it's going to give, I think that will give the S&P a run for its money. So it'll be interesting to see what happens going into this week. But again, I think the things we need to watch, and we have not been seeing these things break by a technically significant margin. We did see this yellow line break by a significant margin, but then we saw the formation of this inverted head and shoulders, which really turned this whole little down leg here that lasted 1, 2, 3, 4, 5 days, turned that really into something of a consolidation, or you might want to call it a bull flag. But going forward, this market sure seems like it's due for a breather. And it just seems hell-bent for leather that it's not going to take a breath. It's going to swim the entire lap plus of the Olympic swimming pool on one breath. So, I mean, this is a little breather here, but I'm talking about something where we see a significant retrace, or a significant downward spell, where we were seeing this on a pretty regular basis. I mean, here, then nothing. So I think we're due. Keep your eyes open. But if you're long and you're enjoying this, enjoy it with an eye to what the market could serve up. But before it's going to serve up any kind of reversal, it goes without saying, we got to see some of these rising trend lines get taken out. And so far, anything that we've seen of the sort has been short-lived and temporary. So at some point, we're gonna see this line break. Almost certainly. It's going up at too steep a pace. If we go back to the daily chart, there is absolutely no way that pace can be maintained for much longer. It's just too aggressive. We can see this kind of a pace go on. We can see this kind of pace go on. This, I just don't think it can last much longer. And this one, this will likely break pretty soon too. It'll have to, because this is going to break. So guys, I'm a little bit at wit's end. I wish we had I'm not at wit's end as to what to do. It's just that I'm looking at the chart and I'm saying, where is a significant pattern developing? The only thing that we might be looking at would be a really big pattern with a 1540 neckline. But that's about all I can see right now in the way of a topping pattern. It sure looked like this might be a double top. That was going to be like a really beautifully symmetrical idea that just didn't pan out. So let's see what happens going into this week. See if we start to get some breakdowns of some of these patterns, of some of these trend lines, and then we may be able to see kind of a larger pattern develop. And I'll remind you, just by way of comparison, I think I got to go to a 4-day chart. When we had this major top back in 2007, we were looking at a pattern that looked tremendously bullish, but it took, each one of these vertical lines is 3 months. 1, 2, 3, 4, 5. It took 16 months for this pattern to develop that we're looking at right here. There's 3, 6, 9, 12, 15, and then it broke down in the 16th month. So I'm not saying that we're going to do the same thing here, but what I am saying is that when you get a major topping pattern, these have been all intermediate. These have all just kind of been within the rally up. the more major development will likely take a significant amount of time. And if we go for another 3 or 4 months and we don't see any type of intermediate reversal take place, then I would begin to at least be open to the idea that we may be putting in instead a major top, because you can see back in the bull run from 2000 to 2007, you can see that there was just really some huge, some long extended periods of time where the market didn't give back anything at all. Look at what happened from June through the middle of February, in going into 2007. There was nothing but up. We've got even more of an upward path going on right now, and we have yet to see the first significant correction. So word is, what I'm looking for are signs of some of these rising trend lines to break down, to start to give us a clue as to when we may see a significant downward leg. If we see it because of what's been taking place, I don't think that would be I don't think it would be the swoon of swoons. I don't think it would be the breaking of the market. I think it might be a sign that that is taking place. But because we're setting a new high on a fairly regular basis, wherever this comes down to, if and when it does come down, wherever it comes down to, I would suspect there would be a meaningful and sizable rally off of that, wherever that might reverse. So if we were to break down pretty hard and come down to 1540, let's say, I would expect a sizable rally off of 1540. So guys, I think that's about all the damage I can do for this weekend and for the weekly review. Let's just keep watching the trend lines as we have them, and be a little forgiving if we dip down just a little bit, because this market has shown a clear willingness, despite little signs of hairline fractures. It's showing quite a willingness just to be very forgiving of those little breaks and power right on up. Hey, I want to thank you for watching the video, and I want to apologize that I can't point to anything right now other than trend lines. You know, I love it when we get a pattern that says, okay, if we take out 1540, then we have a minimum target of 1340 or 1360, whatever it might be. We just don't have anything in the chart like that right now. We're in a leg up that will almost certainly at some point be, in the bigger picture, once we get more data, we'll see this leg up almost undoubtedly as a part of a larger pattern that will have some predictive capability to it. So stay tuned. Let's keep watching. Be patient. If you're long, stay long. If you're short, be careful. So take care. Thanks again.